Hello everyone, welcome back to TuTap and welcome to today's session. So today we are going to discuss a very important notification that has been released by the RBI recently only, that is on 26th April 2023. So the RBI has brought a big change under the liberalized remittance scheme for the International Financial Services Center. So what is this big change that has been brought, why it has been brought, and what is this notification all about? So all of this we are going to discuss in today's session, and I hope you have already heard about the liberalized remittance scheme. This is the very important scheme of the Reserve Bank of India. So we will have the brief idea about this also. So now before starting with the session, do subscribe to our YouTube channel and join our Telegram channel for the PDF of this session. Okay. So now starting with the notification, if you want to understand about the change, you will have to read this statement. Now this statement is very complicated to understand. For this we first need to have the clarity about a clause under the liberalized remittance scheme. Okay, so let's understand the liberalized remittance scheme and this clause. So first of all, I hope you have seen this session that on the liberalized remittance scheme that happened a few days ago only. This is a very important scheme as this is the scheme of the Reserve Bank of India, and so it is very important from the RBI Grade B point of view, and in this session we have discussed all the basics of the liberalized remittance scheme. So starting with giving you a brief idea before going to the clause, liberalized remittance scheme is the scheme of the Reserve Bank of India that allows the resident individuals to remit, to send a certain amount of money during a financial year to another country, to abroad, for the investment purposes or for the expenditure purposes. So this liberalized remittance scheme lays down the guidelines, the rules and regulations for the outward remittances, from India to abroad for the resident individuals. So this liberalized remittance scheme is especially for the resident individuals, and this has a upper limit of remittance that can freely happen of $250,000. So the upper limit of the remittance that can freely happen for the resident individuals is $250,000 per financial year. Now you can send the money abroad for only the positive things, that for sending the money for the child that is studying abroad or maintenance of the relatives abroad. You cannot send the money abroad to buy the lottery tickets or to buy the band magazines and such kind of things. So the sending of the money cannot happen for the wrongdoings. This is not allowed under the liberalized remittance scheme. Okay, even if you are sending the money to invest on the terrorist activities, so that cannot happen under the liberalized remittance scheme. Okay, you can send the money for only the positive things, for only like the genuine reasons. So now the liberalized remittance scheme is for all the resident individuals only. It is not allowed for the corporates or for the Hindu undivided families, for the trust, partnership firms and such. All resident individuals, even including the minors, adults and minors are allowed to freely remit up to $250,000 per financial year for all the permissible current or the capital account transactions. The capital account transactions, that means for the investment purposes, you want to send the money abroad, you can do so. For the loan, for providing the loan, for extending the loan, you can send the money abroad. Okay. Opening for this capital account transaction, see, if you want to do the investment abroad, if you want to buy a land abroad, let's say you want to buy a land or a flat in US, you will have to go to US or you will have to hire the property dealer, and then it will take a certain amount of time. Okay, so you are sending the foreign currency. That foreign currency should be kept in the foreign currency account. Okay, so you will have to open the foreign currency account abroad with a bank in the particular country. So for the investments that take a lot of time, for that you will have to open a bank account in the other country, the foreign currency account, where you will keep the foreign currency that you are investing, that you have sent for the investment, or even from the investment you are earning some income. That income will also be kept in the foreign currency account. Okay, now the money can be sent for the investment, like if you want to acquire the immovable property in some other country, like the land, the flats or some kind of property. Okay, for the direct investment, if you want to do that in some particular company in abroad, as well as for the portfolio investment, you can send the money abroad, as well as for extending the loan, you can send the money abroad. This will all come under the capital account transaction. Now for the current account transaction, that is permissible under the liberalized remittance scheme. If you want to send the money for the maintenance of the relatives abroad, if your child is studying abroad, you want to send the money to the child, or even you can avail the facility of foreign exchange. You want to convert the rupees into dollars because you are going to visit US, you are going to visit abroad, so you want to convert the rupees to dollars or to the pounds or sterling or euro. So there is the availability of the foreign exchange facility for the purposes that is mentioned in this para, you can see, okay, for the going abroad or for immigration, for the business trips and such. But the total limit for the capital account transaction, for the current account transaction, for even the availing of the foreign exchange facility, the total limit is $250,000 only. Now the scheme was introduced on February 4, 2004. This you need to understand and remember. And at that time the limit was USD 25,000. Now the limit is this $250,000. Okay. So after understanding the basic idea of the liberalized remittance scheme that talks about the outward remittances from India for the resident individuals, now we will understand about the clause that I was talking about. So now let's say the investor has sent the money under the liberalized remittance scheme for investment in some immovable property. Okay, this will come under the liberalized remittance scheme. So you are the resident individual, you have sent the money outside for the investment in US. You have bought 3 flats. Now on these 3 flats you are earning the rent. That means you are earning some income. What will you do with this income? Now with this income, either you have to reinvest it, in that particular country or anywhere you want to do, you have to do the reinvestment, or you have to bring this income back to the country. You have to bring this income back to our country, that is India. You have to repatriate it, that is bring it back, and the authorized dealers that are allowed, that are licensed by the Reserve Bank of India to buy and sell the foreign currency, you have to surrender the dollars that you are earning from the rent. You have to surrender those dollars and you will get the rupees in the country. So the investor who has sent the funds under LRS, they can retain or reinvest the income that they are earning from the investment. So this income you are earning from the investment that you have done. So this investment, from this investment, the income that you are getting, the received, realized, unspent, unused foreign exchange, that is the dollars that you have earned, either you have to reinvest it, or if you are not reinvesting it, you have to bring it back to the country. You have to surrender it to the authorized dealer that is licensed by the Reserve Bank of India within a period of 180 days. Now, this is the clause under the liberalized remittance scheme. But in February 16, 2021, the remittances, if you want to send the money to the International Financial Services Center that is present in India, this will be done under the liberalized remittance scheme, because the International Financial Services Center is considered as a foreign jurisdiction. If we talk about the financial, if we talk in the financial or the economic terms, the International Financial Service Center is considered as a foreign jurisdiction. The gift city, that is the Gujarat International Financial Tech City, is a International Financial Service Center. It is the first and the only International Financial Services Center for now that is present in India. Okay, so to deepen the financial markets in IFSC, to provide the opportunity to resident individuals to diversify their portfolio, the guidelines of the LRS were reviewed, and it has been decided that the resident individuals will be permitted to make the remittances, to send the money under the LRS to the International Financial Service Center in India. And the IFSC, the gift city, is under the Special Economic Zone Act 2005. So now, if they are sending the money to IFSC for what? So the remittance shall be made only for making investment if they want to do investment in the securities present in the IFSC. And the securities, the financial services in the IFSC is usually in the foreign currency. It is in the foreign currency. Okay. So only for making investment in the securities in the IFSC, they can send the money, other than those issued by the entities or companies. And these securities should be other than those that is issued by the entities, companies resident in India. Okay. Resident individuals may also open a non-interest bearing foreign currency account. Now here you can see there is not anything that is written regarding the non-interest bearing. Okay, in the LRS common scheme, there is not the mention of non-interest bearing, but here it was written that in the IFSC, if you are doing the investment, if you are sending the money to the IFSC, it should be for under the non-interest bearing foreign currency account in IFSC for making the above permissible investment in the securities under the LRS. So if you are opening the foreign currency account, it should be non-interest bearing in the International Financial Services Center. Any fund that is lying idle in the account for a period up to 15 days from the date of its receipt into the account shall be immediately brought back into the rupees, into the Indian rupees. Okay. So if any amount, like here it was written that if the unused amount or unspent amount, the realized received, so any kind of foreign exchange that is being kept in the foreign currency account, if you are not reinvesting it, if you are not investing it, then under 180 days it will be brought back. But here it is written that within 15 days only it will be brought back to the country in the Indian rupees. So I hope you have understood this very clearly. Resident individuals shall not settle any domestic transactions with other residents through these the foreign currency accounts held in IFSC. Okay, so if you want to send the money to your mother, you will not send through the foreign currency account. If she is also living in India, you are also living in India. The authorized dealers are the institutions that have the license from the RBI to sell and buy foreign currencies. Most of the authorized dealers are banks only, and AD category 1 bank means a bank that is approved by the Reserve Bank of India to sell and buy the foreign currency to carry out all the permissible current and capital account transactions. So this is the broader understanding of the authorized dealers. Okay. So now what change has been brought? Okay, so we have understood that in the LRS, the clause is if there is any unused, unspent, received or realized amount, the foreign currency that is in the foreign currency account, if you are not using it within 180 days, if you are not reinvesting it within 180 days, you will have to bring it back to our country, to India. And if we talk about the IFSC case, in this there are only 15 days that is given to a person. So now the change has been brought by the RBI. RBI removes the restriction on the interest earning FCA in India's IFSC. First of all, the clause has been deleted, that non-interest, this has been removed. Okay, so on a review with an objective to align the LRS for the IFSC set up under the International Financial Services Centers Authority Act 2019. So under this act of the 2019, the International Financial Services Centers are set up in India, and the GIFT, that is the Gujarat International Financial Tech City, is the one of the IFSC, is the first and the only IFSC for now in our country. Now to align the rules for the IFSC in India as well as to foreign jurisdictions, that are the foreign countries, we can say, to align the rules and regulations for both of them, this kind of change has been brought in para 2 second. Okay, so this point has been changed a little. So the para 2 is changed to the resident individuals may also open a foreign currency account. So the non-interest bearing, you can see the non-interest bearing has been removed. So this is not present now. Okay, non-interest bearing has been removed, and this 15 days has been removed for now for the International Financial Services Centers in that foreign jurisdiction also. If in the foreign currency account you are keeping any unspent, unused foreign currency or any realized foreign currency that you are not reinvesting, then within 180 days, not 15 days, within 180 days you have to bring it back to a Indian rupees. Okay, so I hope you have understood that two of the things have been changed. The non-interest bearing has been removed, as well as the 15 days has been converted into 180 days. So thus the condition of repatriating any funds that is lying idle in the foreign currency account for a period up to 15 days from the date of its receipt is withdrawn with immediate effect. So this 15 days is not now, which shall now be governed by the provisions of the scheme as contained in the master direction of LRS. So the common clause of LRS is 180 days, that within 180 days if you are not using the money that you have earned in foreign country through the investment, or you are not using the money that you have taken from India to there for the investment, so you are not using that, under the 180 days you have to bring it back. Okay, the central bank has removed the requirement to repatriate, to bring the funds back that is remaining idle in the foreign currency account for up to 15 days. This has been removed. 15 days is not here now, 180 days is there now. Okay, as per the common clause of liberalized remittance schemes in the IFSC, because it is also foreign jurisdiction. So why we are discriminating against the International Financial Services Center that is in India, that is set up in India, as well as the non-interest bearing clause has also been removed. Now you have to remember that the received, realized, unspent or unused foreign exchange that is being kept in the foreign currency account, if you are not using it within 180 days, if you are not reinvesting it within 180 days, you have to bring it back and surrender it, give it to the authorized dealer who will take these foreign currency and will convert it into rupees and will give you the rupees, the INR domestic currency. Okay, so even like any kind of money that you have taken there or that you have earned from the investment, so if you are not using it, you have to reinvest or bring it back. Okay, so I hope you have understood this very clearly. And this is the first question. I hope you will be able to easily answer this question. And this is the second question. Now here, read the question very carefully and then answer this question. Okay. So this is a big announcement from EduTab that we have brought for you the comprehensive guide for RBI, NABARD and SEBI, so that through a single guidebook you can get all your common queries answered. If you want to know about the examination, what is the pattern of the exam, what is the previous year cutoff of the exam, what is the syllabus for the exam, all of these queries can be answered through this single guidebook. You do not have to visit different links, you do not have to visit different websites. Even if you want to know about the preparation of the examination, you can know everything through this single guidebook, and this is very colorful, very easy to read. You can go through this complete guidebook to have the clear understanding about the examination. And let me tell you that this is absolutely free of cost to save your time, to save your efforts, and you can easily download this guidebook. The link is provided to you in the description box below. Okay, so do download this guidebook, and thank you very much. If you have any query, you can mail us here or you can contact us through this number. Thank you very much, everyone.